get to Rick Santelli in Chicago, one of the great teams, Bianco Santelli. Rick, take it away.
Well, I feel the same way about you and Jim Bianco, that's for sure. Listen, about a week ago I did a Santelli exchange and I called Europe systemically important. And that really is the topic because Jim sent me some interesting material. You know, the effects of Europe slipping into recession or already being in recession isn't the, 8% that we may export to Europe. It's much bigger than that. Give us some data.
It starts with the financial sector. 25% of the assets of banks in the United States have as their parent a European bank. Some of the largest banks in the country are owned by European banks. HSBC is the 10th largest bank. Deutsche Bank, which owns Irving Trust and Bankers Trust, would be collectively the 6th largest bank. If you want to go down the list a little bit further, say Sovereign Bank in Boston has Santander in Spain as its parent. Now, a parent does not mean that if there's a problem in Europe, that your bank in the United States is a problem. But if there's a problem in Europe, the parent might be less risky or less willing to take risk. And in an era when we want banks to hand out loans, if the parents are struggling because Europe is struggling, we might not see that loan growth expand as everybody would hope to. So it's critically important, Europe, to the banking system for starters.
And I totally agree. So I think when we frame this issue, we need to frame it on the context that there's a lot more at stake with regard to capital and how capital investment and balance sheets. So what you're really talking about is the parents' trickle-down balance sheet issues. You know, if the parents tightening their belt, it's hard to think that the subs are going to be expanding in a robust, crazy fashion.
Right.
So we're in agreement there. Now, let's take it a step farther. The deterioration is ongoing. The numbers in Spain, Greece, Portugal, France, Germany continue to deteriorate, and Spain hasn't even asked for a bailout. So every day, these reforms, the metrics change.
That's true. They do change, and it's been very difficult to try and get a hold of it. But that's been the cycle that we've seen in Europe. You know, when things get bad, everybody promises the sun and the stars and whatever it takes, and then it gets better, and then they don't want to follow through on the politically difficult things. And that's why when Spain were holding up on conditionality, that's the word that's the only word that matters right now.
Conditionality, that is the word. You know what it's like? It would be like having the Olympic weightlifters doing it on sand. That would be the extent of it. Not nearly as easy, and the ground's always shifting. To fix Europe, there's going to be many years that pass, in my opinion. Your thought quickly?
Yes, exactly. And that's why you're seeing big protests outside of the parliaments in Madrid and the other capitals. They know conditionality is important, and they're not happy about it. And that's the rub.
No, because they're on the losing end of conditionality. Carl, back to you.